about a month ago, my FICO score, which is a way to measure your credit score, that's one of the scoring models, was exactly 800. It hovers somewhere between 820 and 800, depending upon my credit utilization within that month. This takes very little effort for me to achieve and for me to maintain, and I'm going to give you a general blueprint on how to do that in this video, okay? This video is aimed at people that have no credit right now. This is not aimed at someone who needs major credit repair because they've had bad credit history. I just mean someone that has no credit history. You can get to 800 very easily if you follow these steps in this video. We're going to get into all that, but first, if you're new here, I'm Austin at McConerCloudBusinessQueen.com. I'm also a stock market investor. I love making videos about money here on YouTube. If you're not subscribed yet, become one of those 2,400 or so people. And as a thank you for doing that and clicking the like button, here's a picture of both my cats, Millie and Luna. They both thank you for subscribing. Okay, let's get into it. So the first thing you gotta do is you have to open a credit card, all right? And the way you're gonna be able to open a credit card if you have no credit history is you're gonna have to get a secured card, most likely. And this secured card is where you take money, you give it to the bank or the credit card issuer, and they give you a credit card with that same security deposit amount that you gave them. For example, you give them $200, they give you a credit card that has a $200 limit. Then you make some purchases on that credit card, you pay it off in full every single month. You never have to pay a single cent of credit card interest in order to get a great credit score. I've definitely heard that. Before I started my credit journey, I heard, well, you have to pay some interest to the credit card company so that they'll give you a good credit score. That is extremely false. I have never paid a single cent of credit card interest, and my credit score is above 800 every single month. So the two best options for this secured credit card, I really think there's only two options out there. Number one is the Discover It secured card. This card is really cool because it actually has cash back in it already. So you can start with as little as $200 for your credit limit. You send them $200, like I said earlier, they'll give you a credit limit of $200. You go out and spend money, you can buy gas, you can buy groceries, you can buy whatever you need to under that $200 limit, as long as you're not maxing out that credit card and you're paying it back in full at the end of every single month. Then they're going to provide you with this credit, be able to give you an opportunity to build your credit score, because every single on-time payment helps your credit score out. And the longer you have an account open, that also helps your credit score out. So since that's your first one, it'll probably give you a nice pop in your credit score. You can download something absolutely free like Credit Karma, or if you get this Discover It card, they'll actually let you see your FICO score, which is one of the most popular scoring models. You can actually see that inside the Discover app for free just for being a Discover card holder. So after making about 6 to 8 on-time payments, Discover will actually send you a check back in the mail. They'll say, hey, congratulations, here's your $200 that you sent us, and now you are an unsecured Discover card holder. So you're not only gonna get a credit card out of this, you're now gonna have a secured credit card where you get your deposit back. You're gonna be building credit history because you have on-time payments and your account is open for longer, which remember, that helps out your credit score. And with the Discover It card, you're gonna be getting cash back all the while making these purchases. It's about 1 to 2%. But at the end of your first year, they match all your cash back and they basically double it for whatever you had that full year. Maybe you got $150 of cash back in your first year of holding your Discover card. They'll match that and give you another $150 at the end of your first year, which is really, really cool. Definitely feels like free money as long as you're paying that balance in full so that you have to pay $0, 0 cents of credit card interest, okay? That's option number one. Option number two, if you're more of a cash strapped situation, you don't have a ton of cash around, a good option for that first secured card would be the Capital One Platinum Secured Credit Card. That's a pretty long name for a credit card, but you can go as low as $49 for that security deposit, and they could give you up to a $200 limit based on your $49 initial deposit. And same idea, you pay in full at the end of every month. You make those 6 to 8 on-time payments, and they send you that money back either through a statement credit or through a check in the mail. And then at that point, you will graduate to an unsecured card. Like I said, with this first card, since it's the first thing on your entire credit report, because this video is for people that have no credit, not for people that have the need for credit repair, this first card is going to bump your credit score like a lot. Like maybe it says it's a 500 right now. It might go up to like 600, 650, something like that. And then it'll slowly inch up from there each month because you're making more on-time payments and you're holding this account open for even longer. The longer you have the account open, the higher your credit score is going to be. And the steps from here are even easier than those first few steps. Step number 2, after getting that secured credit card, paying it off for 6 to 8 months, getting your security deposit back, getting some cash back along the way, keep on making on-time payments. Keep that account open. Keep being a responsible borrower. Don't max out the credit card. Keep on paying in full every single month. If you do this for about a year, or maybe up to like 14 or 16 months, you're going to be somewhere in the high 600s or the low 700s, probably. That's where you can start to get approved for that next tier of credit cards. So it would be a good idea to get that next card because the total amount of accounts you have open affects your credit score. And if you have more accounts open, it actually increases your credit score, which sounds a little bit silly, but you got to play the game, okay? And the longer you have those accounts open, the more it increases your credit score. And you also need something called mix of credit, which is different credit types. So what I would do next to push you to that next level is open another credit card, something that is interesting to you. Maybe you're a bank with SoFi right now. You could get the SoFi credit card. You're going to need a credit score somewhere in the 700s, something that's established where you've proven that you are a responsible borrower. You could get the SoFi card. You could get the Apple card. You could get the Quicksilver card from Capital One. These are kind of those second tier cards. All of the second tier cards are still going to be $0 annual fee cards. So you don't have to pay anything to hold these cards, but they're definitely going to give you some cash back. Apple card is going to give you anywhere between 1% and 3% cash back. SoFi card is normally 2% on all purchases. There's other cards that are like 2 to 4%. There's some that are 3% at some places, 2% at most places, and then 1% everywhere else. So it just depends on your financial life, what that second card you get is. And then the third card you get, you could kind of get a little more of like a big dog card that might have an annual fee. What I did for this is instead of getting a card that had an annual fee, I got the Amazon card from JP Morgan Chase. This gives me 5% back at Amazon and Whole Foods and 365. Basically anything that Amazon owns, I'm going to get 5% back. The only thing I have to make sure that I have in order to get that 5% is a Prime membership. I already had a Prime membership, so it's basically an annual fee, the exact amount that I have to pay for a Prime membership. But past that, there's no annual fee, and I get a ton of cash back from shopping at Amazon, from shopping at Whole Foods. It makes everything 5% cheaper. So it's really a no-brainer if you already shop at those two places a lot anyway. There's also normally a welcome bonus for this. You'll get like a $250 cash back, or you get some kind of Amazon gift card if you open that credit card with JP Morgan Chase, that Amazon Prime card. Check it out. It's an interesting one. Another interesting one for that third tier card could be the American Express Blue Cash Preferred. This is a card that has an annual fee, $95 annual fee. They have a welcome bonus. This is a very common thing with these upper level cards. $250 welcome bonus when you spend $3,000 in the first 6 months. You get 6% back at supermarkets, 6% back on a lot of streaming services, 3% back on gas stations and transit, and then 1% back everywhere else. So if you want to get into the American Express ecosystem, this would be a great first card. But just know that you have to have a pretty high credit score with a decent credit history in order to get approved for these. So don't go out and try to get this for your first one because you don't want to get declined for a card. Every time you apply for credit, it's a credit inquiry, and that actually drops your credit score by a little bit for just a few months. Those credit inquiries drop off your credit report and it stops hurting your credit. But we don't want to apply for a credit card and to get declined because we didn't have enough credit history. So make sure you're climbing that ladder of secured card first, tier 2 card and then get that tier 3 card that potentially has an annual fee, a little bit more interesting bonuses like that 6% cash back on streaming services, supermarkets, Amazon Prime card like I was talking about, 5% back at Amazon and Whole Foods, and there's a whole slew of other benefits that I didn't talk about with that card either, but that would be the general rung. I would bet you anything, after about 2 to 3 years of doing this, always paying your statement in full, never paying any credit card interest, holding those accounts open, not closing any of your accounts, you'll be in the high 700s or the low 800s. And then you'll be able to use your credit score as a tool whenever you go and buy a house a few years down the road from that, because what you want is the absolute best interest rate possible whenever you go and get a mortgage. If you have a bad credit or if you have no credit, you're going to be paying a lot more in your mortgage on a monthly basis and on a 30-year basis than the guy next to you who all he did was open a few credit cards every now and then to build his credit history. And all the while, he was getting cash back on the way. As long as he was a responsible borrower, he was net positive from using these credit cards, and he's going to get a lower rate on his mortgage, paying less monthly and obviously less over a 30-year span of that life of the loan. So I hope this helps you in a major way. Thank you for stopping by. Go out there, build that credit, get that 800 credit score. Thank you so much for being here. Have an amazing day.